Hi everyone, this is Jason Burak. Just want to give you guys a quick video and talk about where I see bargains in the market. I run a stock screener. You can do this easily for free on Yahoo Finance. I use CNBC to do this. Every couple months, I look for bargains for myself and for our consulting clients for industries just to get an idea of what sectors are cheapest. I've been saying for a while oil's cheap. Oil just keeps getting cheaper and cheaper, at least it appears that way. But I want to give you an example of how cheap you can find quality companies with solid earnings. Maybe their earning power has dropped a little bit with the oil prices, but these companies will survive. I did a stock screener looking for companies with under 15 times PE ratio, so they're trading at 15 times earnings or less, current earnings, and then they have a 3% dividend yield or more. And we can go through the list here on some of these companies right now. As you see, there's about 43 companies that came up, and most of them, I can name the list on some of them. So you have Canadian Oil Sands, which is out of Canada. They're higher, Charlie, Oscar, Sam. They're a higher cost oil producer. They're up there with Suncor. I think their costs are quite a bit higher, but they should probably survive. I'm not sure their debt levels. I haven't looked at the financials that much, but they came up in the stock screener here. China Oilfield Services, their CVR Partners, which is an MLP, I believe Carl Icahn is on the board of directors of that. He pieced that company together. There's Frank's International. That's a really solid oil services company. There's Gazprom out of Russia, which is, selling at a really low earnings multiple. They have a humongous amount of oil and natural gas. So they have a lot of natural gas production. So even though the oil prices are down, the natural gas prices are still fairly stable. They have not crashed. High Crush Partners is a frac sand MLP. It's a pretty good MLP. There's some other interesting Texas-based royalty trusts. I think I'm not familiar with Yucatan Royalty Trust, but there's almost all the companies that are on this stock screener. There's a lot of discounted MLPs. So Midcon Energy Partners, MVC Capital, Natural Resource Partners. There's just a bunch of MLPs on this list. Occidental Petroleum is a regular oil exploration company. It's near a 52-week low. I think its dividend yield, let me just check it. Its dividend yield is now almost 4%. So it's around $78 a share. It's trading at about 11 times earnings right now. So it's a fairly cheap stock. Some of these Texas royalty trusts, they're a little bit different, I think, set up than MLPs, like the Sabine Royalty Trust and the San Juan Basin Royalty Trust. These pay out high yields. I believe they were also hedged, but you'd have to go in there and look and check. But there are a lot of bargains. I've been saying it. I mistimed it a little bit. Obviously, on the Seadrill, I thought the oil market had bottomed, around 65, and the trend traders and the charts just kept taking it lower and lower. But the rig count is dropping in the oil market now drastically. There's Woodside Petroleum here, which is out of Australia. They have large oil and natural gas reserves that I think they're going to be developing and sending them on to China. They're right off the coast of Western Australia. There's Western Refining, which is a developing refining company here in the U.S. And then they're close to shale oil production. And there's Transocean Partners, which is a deep water MLP. And Terra Nitrogen is a fertilizer company. So most of the companies in the stock screener, guys, are related to oil and natural gas. There are bargains to be had, below 15 times earnings. I know some of you already were invested in oil and gas, but if you're investing in oil and gas, you shouldn't really be looking for capital gains really anytime soon. You should be looking for companies where you can get paid to wait, where you can get a sustainable yield. And I think the quote from, I think it started with with one of the Rothschild is, you buy when there's blood in the street, even if it's your own blood. So if you have cash on the sidelines, you're looking for income potential for some of your investments. Obviously rental properties are good for income, but to diversify and own stocks, I think there's a lot of good income potential in the oil market. So I named a few of the MLPs. There's a lot of discounted MLPs, and there's a few there's a number of really good, well-capitalized, large-cap oil companies. Obviously, I don't think ExxonMobil or Chevron or BP or Total or Royal Dutch Shell or any of those guys are going to go bankrupt because a lot of them have a large exposure to natural gas. They're more balanced. They don't just have humongous amounts of exposure to oil. I mean, the oil market, it can't stay this low for that much longer anyway, in my opinion, because the majority of world's oil production is not profitable at these prices. In order to spur investment later on, the oil price has to be higher. And there's just so much oil that's consumed. Even if there was a drop in demand and there was a slight oversupply in the market, we're still consuming at least 90 million barrels per day of oil, and that's on a bad day. I would say we're consuming at least 90 million barrels per day of oil. So that's over 3 billion with a B barrels of oil a year that needs to be replaced. And there's still big growth, long-term growth prospects for oil consumption in those markets. So then the key is not buying an over-leveraged company, a company that has too much debt or wasn't hedged with the right production or had a bad mix. Their production costs were too high and things like that. So, you got to be willing, if you're a value investor, if you're long-term, if your time frame is more than 6 months or 12 months or 18 months, there's some really good bargains here with oil and dividends that you can get paid to wait. Now, I know there's a lot of people that are unhappy. The thing is, trying to time the market and the bottom of the oil market, but I think we are seeing evidence that that the bottom is coming in the oil market, and a lot of it is because the rig count is dropping like crazy in the U.S., and the shale oil producers, a lot of them were only hedged, which was the marginal demand in the market. Really, the only oil supply production growth in the market since 2007-ish has been shale oil production. There's really been almost no growth globally on a worldwide basis for oil production growth. Almost all the marginal oil production growth has come from shale oil production. So that could potentially come offline. There could potentially be bankruptcies in shale oil. We've already seen a few, but there's over 170 billion. Depending upon which estimates you read and which over-the-counter derivatives, there's between 170 billion and 500 billion dollars worth of shale oil bonds, junk bonds, and or shale oil derivatives that are tied to those junk bonds. So those could potentially, cause some of these companies to go to lose, go bankrupt and lose their equity. But the larger companies that are well capitalized, the larger ones that missed the shale boom, so your larger ones like your ExxonMobils, your Chevrons, your Royal Dutch Shells, those guys are going to come in here at some point, or and they're going to go in and buy up some of these assets for pennies on the dollar, fire sale assets soon. So you don't want to be necessarily holding the little tiny small companies. You want to look for companies with good balance sheets that can survive this. And if you're getting paid to wait, it's pretty good. So there are some good opportunities here with the stock screener. I just like doing the stock screener to see, based on valuation stuff, some basic valuations. Obviously I know more thorough ones that we could look at, but just seeing some basic ones, what the market thinks is cheap right now. And if you go down this industry list right here where I'm scrolling, almost all of these are in oil production, MLPs, oil-related service company ones, out of the 40-something that I found. So hopefully you enjoy this video. There's a lot of bargains in the oil market, like I said, whether it's the larger cap oil stocks that are going to survive and you're getting paid a solid yield. I think Chevron's 4% dividend yield, you're getting paid to wait. There's good oil service companies like Halliburton and Schlumberger and Weatherford, and Baker Hughes got bought. So even Halliburton knows that there's bargains to be had there. And I think long-term, really, the only way the oil production growth can happen, and we have to replace this oil that's being consumed, because the rest of the world just continues to want to consume more oil, even if the U.S. and Europe is cutting back. The only way to grow oil production long-term is really the deep water, those large, prolific wells where we're spending, a good amount of exploration and exploration costs and capex budgets and things like that. And there's just been, tens of billions of dollars in capex budgets. Even large natural gas projects have been cut. Tens of billions of dollars worth of natural gas projects have been cut because there was oil as a byproduct in them, or natural gas liquids and things like that. So it's just very interesting, and I think there's a lot of potential here if you're a value investor, your time frames at least 18 months and you're looking for yield. But you shouldn't buy all of your position at once, and you should do your own research and homework. I'm just giving you guys a general framework here for where I think there's still value in the market. On another stock screen I ran prior to this one, I also saw some value in some larger pharmaceutical companies, but most of those companies, just don't really have growth catalysts. A lot of the larger big pharmaceutical companies have drugs that are coming off patents, and they need to find revenue replacement stuff. So, but there is some of those value potential there, but in general, there's just not a lot of value in this market in terms of large caps and mid caps on U.S. exchanges other than in the oil patch. Thanks for watching this video, guys. I just wanted to give you a quick update, show you that we do these value screeners every couple months as we're longer-term value investors looking for bargains. Never buy all of your position at once, no matter how good the story sounds or how good the numbers look. There's always something that could potentially go wrong. And thanks again for your time, and thanks for helping us fund all of our money on our crowdfunding. We're over 500,000 views on YouTube. We're marching towards 1 million views. Maybe we'll get there by January 1st, 2016. And Happy New Year, everyone.